Oh, hi everyone, and welcome to this webinar where David and I will be looking at the markets, the US markets primarily, and also some futures. And hold on a minute, hold on. Okay, apologies about that. Let's start again. What was I saying? Yes, welcome to this session, to this webinar with myself, Anna, and my husband, David, who is sitting behind me. I know some of you have been along before. I know we've got some new people here. It's slightly different. You would have had emails about our weekly webinars, and we've actually got another session after this one. There's a little break because what we've decided to do is we've actually split the day trading sessions into one where we just focus on stocks, and that's going to be coming up at 3:15 our time. So in this session, we are going to be looking at the concept of day trading, and it gives us a little bit more scope, if you like, for looking at some currency futures. I think David has got some indices and some commodities as well. Although, having said that, the methodology that we follow is actually applicable to any market and any time frame. But we found, particularly with stocks, there's a lot that we want to say with regards to the fundamentals, to stock selection, scanning for particular stocks that is particular to stocks. So we thought we would do that in a separate session. So apologies for that slight confusion at the beginning. Before we start, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So I'm really going to literally whiz through this because there's a lot to go through, and things have been kind of moving, and we want to go and catch them. Right. I said earlier, the methodology that we use, volume price analysis, is looking at the relationship between price action and volume. And I know some of you who come along are familiar with the methodology and perhaps have even invested in the book that is up on Amazon. If you haven't, that's where you will find an explanation of how this methodology can be applied. What we've also done is we've also done a companion book, which basically gives, as you can see here, over 200 worked examples of the methodology in action, because the great thing about this methodology, it's your foundation. And because price action cycles, price action repeats, it's never 100% identical, but in general, similar signals will reoccur. And once you understand those signals, or what you're looking at in this relationship between price and volume, then you will spot them immediately. When you see a chart, you will say, that is potentially a signal of a reversal, or is that potentially a signal of continuation. Now, price action and volume are obviously at the heart of the methodology, but it actually includes three other elements. One is candles, and by candles and patterns, candle patterns, but other patterns as well. And this one, it's last on this schematic, but it's by no means the least important. It's probably one of the most important elements of VPA, and that is support and resistance. And support and resistance is hugely important as part of technical analysis anyway. But these are the 5 elements that make up VPA. Now, the reason we've put them into this sort of schematic is, as we say here, this lays the foundation for your trading methodology. Understanding these elements, understanding how they are represented on a chart, that's where you start. Now, on top of that, you can then add in your indicators. People use indicators. There's absolutely not, you know, I've really nothing wrong with indicators, as long as you understand, you know, what their function is and use them in appropriate price action at the appropriate time of the price cycle. And that's where I think a lot of traders go wrong. They kind of start up here. So they hear that, oh, you know, oh, Bollinger Bands, oh, that's what I need to understand about Bollinger Bands. That Bollinger Bands are fantastic. You know, you can, you know, but you've got to start down here. Then you can apply, you know, the indicators, that your preferred indicators. And Bollinger Bands, you know, they were designed for a very specific function. Those are there, and then on top of that, again, you can add proprietary tools, and we have developed our own proprietary tools that you will see on the charts that we are going to have a look at now. I'm just going to push that down. A very quick look. Obviously, today is the inauguration. Not sure what markets, you know, markets may or may not be doing. Very quickly, let's see, because there is still fundamental news releases coming along. I'm just going to have a look at Forex Factory. Let's have a look. Let's have a look. Let's have a look. Let's have a look. This is very strange with 8:30 p.m. Oh, right. Okay. Well, for those of you who are on the Forex, in the currency space, you can see the highlight is the BOC, the rate statement, which is actually at 8:30 this evening, which completely threw me, because normally it's in the afternoon. And we have for the UK, we have the governor of the Bank of England also speaking later. But I'm really a bit confused about this. In fact, I think there is something wrong with Forex Factory, and unfortunately, I have a backup here with financial juice. Yes. It completely threw me. It's set to the correct local time, but the calendar is completely screwed. Okay, here we are, 3 o'clock. We have the 3 o'clock London time. We have the BOC, and then we have the governor of the Bank of England. So obviously, if you are trading the currency futures, and you're trading the Canadian, and you're trading the British pound, you would obviously have to be aware of what is going on. Now, I said earlier about day trading. Slightly different approach today, because I want to take the just a general look at what we have to be aware of when we are day trading. And the example I'm going to use is this example here, which is actually the 6B, which is the futures contract for the British pound. And a factor that we have to confront as day traders is, obviously we all come to the job as a day trader at different times of what is now pretty much it is a 24-hour cycle. Even with stocks, you now have the pre-market. When we started with stocks many years ago, we were certainly we were not privileged to see what was going on in the pre-market. And I believe some brokers also allow you to trade the pre-market, and 24-hour markets, really, they did not exist other than for in institutions. We were restricted, you know, exchanges opened and exchanges closed. Now, in some ways, that made life an awful lot easier, because there was a definitive start and a definitive close, if you like. So we all knew when we had to be there at our screens, and we all knew when the market was closed. With 24-hour markets, although it is a continuum, they do actually break up into, if you like, sessions within that 24-hour period. And as a day trader, you're looking to do one of two things. You're either looking for a reversal, you see a move, it's going to reverse, you're going to take the opportunity to take the trade, or there's a move in progress and you want to join that move. And those are the basic two approaches. With this methodology, that will certainly help you to do that. But you have to be aware that the price, how price is moving, it is still moving within the background of these sessions. So if you are a British pound, for example, as we can see here, this is the 6B. This is the 15-minute chart. Well, we know London opens at about 8 o'clock. Here we are. What happened at 8 o'clock? Well, not an awful lot. in fact, it was moving sideways along this very, very important support line. It's actually a resistance, which is the R3 of the Camarilla indicator. So when you look at a chart, first of all, you have to see, well, what's been going on. It was actually been moving higher from this is overnight for us in Asia Pacific. In fact, there's been a very, very nice move higher. London comes, Europe opens, London comes in, volume increases, but it actually didn't go very far. As you can see here, it simply moved sideways. It was oscillating around, as I said, a very important level, which is the R3 of the Camarilla. How you draw your support and resistance lines on your chart is up to you. We use, as I said, price-based support and resistance with the Camarilla, using the Camarilla. We also have price-based support and resistance with the accumulation and distribution. This is from NinjaTrader platform. And the beauty about this indicator is once a level is tested on more than one occasion, continuous, it becomes stronger. And we can see here this hatch lines becomes thicker and deeper. So we know that is going to be a strong level. What we also know about the Camarilla is the third level, be it the R3 or the S3 at the other end, because there are 6 levels to this indicator here, are also very, very important levels. So it was basically been moving sideways. Then we had an injection of, we had some volume come in. We also had some volatility come in, and up it went. But it then ran into some volume-based resistance, which is here, which is on the volume point of control. The histogram at the back here is part of this indicator. It's based on the principles of volume at price, which is basically it's volume and price action over time. And the longer a market or an instrument stays at a certain price level, then what happens is this histogram at the back gets lengthens. This is the volume point of control. This is at the place on the chart which is where you have the deepest amount of volume over time, and it's also a place where eventually after it will have a period of consolidation. It will either go one way or another. This morning, the move on the 6B, as well as on the spot version, which is cable, it really didn't look as though much was going to be going on. It kind of, as you can see here, went up. There was volatility. It spent an awful long time in consolidation, but it did carry on higher. And then we got the first signal that we were going to get a smooth move, because as a day trader as well, what you're looking for is you don't really want to stay in trades very long. That's by definition as being a day trader. You're not looking to hold positions over days or or even weeks. So what you have to look for in a chart are these strong signals where the probability that the trade is going to play out in a reasonably fast move gets you in, and you can get out as quickly as possible. So after this here, we have one of the classic signals from which is a candle pattern, which is a shooting star pattern. What we want to see underneath it is a lot of volume, which we had here. So we had this really, really nice signal, shooting star, and then the price did actually reverse. But where does it reverse to? Because it's, finding an entry signal is almost, I wouldn't say it's easy, but it's fairly straightforward. You may decide you like to look at shooting stars. The opposite of a shooting star would be a hammer candle at the bottom of a trend. You may like to trade 2-bar reversals. You may like to trade, think of a candle pattern or candle configuration that you like, fine. But this was just such a strong signal that came in. This is actually the 15-minute chart. So, it was really inevitable. Usually one signal like this, oftentimes you think, oh, well, that looks brilliant. It doesn't actually reverse as strongly as this did. And in fact, it then did pause. at the VPOC, because what happens when, when something is, as you know, with support and resistance, support becomes resistance and resistance becomes support. So there we are, we got there, it broke through. As you can see here, obviously this candle went and tested it again, but this is such now a strong level of resistance, having been support, it is now resistance, and down it went. And where has it gone to? We have the signal, you stay in, what happens now? Well, this is where support and resistance comes in again. And in fact, it's gone straight back down. As I said, this S3 level is so critically important. You may use, I don't know what the equivalent would be in Fibonacci, but what you have to determine with your support and resistance, with your patterns is, what are the important ones? Which are the most important? And you will find that price action will inevitably return to these regions. Now, so that came in on the 15-minute chart. The configuration I have here is actually based on 2 Renko charts. Then we want to have some context in a slower time frame. And in fact, these levels here, I'll just bring that down. These are actually 6, as I said, there are 6 levels calculated by this indicator. And these levels are your levels for the rest of the week. So if we look back here to the start of the week, which was obviously on a Monday, we had it sold off overnight, but by the time London started and opened, in fact, the 6B has been in an uptrend, but we have had this, quite dramatic reversal that we have seen on the 15-minute chart. But the reason for having these levels is they will give you your price objectives. As I said, these are valid for the rest of the week. So didn't quite get to the R4. I suppose after the R3, the 4th level is the next most important level. But we know why it stopped here, because of the R3 on the faster time frames. The way the indicator works is all charts up to, but not including the hour, the levels are recalculated every day at the end of the session, and then you get fresh levels for the day, 24 hours, and then this is for the week. Now, if this is going to carry on lower, well, as I said, what's this one here? It's now back to the R3 on the hour, but at the moment it looks like it's really kind of moving in congestion, and it's moving in congestion because it's in congestion, as I said, on the R3 of the 15-minute chart. How does this, so being aware of how these signals appear, this signal actually appeared, what time was it? Was it 11 o'clock? It wasn't quite the start of the US session. The Forex session for the US is about 1 o'clock, and it actually brings me to another point when I said about being aware of the sessions that you are in. This really nice signal came in at 11 o'clock. London is still in full flow, lots of volume in London, Europe, etc. And you think, oh, great, down it went. But look what happened. As soon as, we know there's a session crossover in progress at the moment. We're now, we've just had the cash markets open again. And this is where you're perhaps going to get a change of sentiment. So you, as a trader, be aware that day trading, yes, certain markets, they do operate on a 24-hour basis, but within that 24 hours, they also have their own cycle, as it were, and you can get caught very badly. If you weren't aware of that, you saw that, you think, oh, great, down I go, and now I'm in congestion. Now, it may carry on lower. Price doesn't move in a straight line. It moves higher, it consolidates, it may reverse, or it may carry on higher. And this is where our VPA comes in and our volume comes in. So, but that's just a general, what you have to consider as a day trader. Be very, very aware of the time that you're actually at your screen, what you're trading, how does that sit within the different sessions? Is it going to move more strongly perhaps in London. I mean, certainly when London opens, the volume is certainly going to increase because, you know, London is the centre for Forex. It's certainly going to have more participation than it would have done in Asia Pacific. Is that going to carry on in New York, North American session, or is this actually going to reverse? And just very quickly, in combination with the Renko that we have here, this is pure price based. I've got the Camarilla on here as well. This is where the shooting star was at this level. You won't see it with wicks because the bricks don't work in that way. And the way we use this, the Renko with our other indicators, this is the trend dot, this is the trend monitor, and you're looking for a match of the dot and the monitor. And what the Renko will do, it will keep you in. So this is the reversal that we saw straight back to the R3, and also this strong support line that we have here. As I said, it gets thicker. We've had a consolidation. Because this is a very fast chart, one of these bricks posts after every 3 pips goes through the market. So we did have a little reversal there. Would that have been tradable? Well, it depends. If you are literally taking ticks and very, very small quantities, maybe that would have been, but it's now gone back into the red. It's basically moving sideways. That's that one. Finally, what I also have here to give us an indication of kind of the momentum that we have, because what happens is with price, it doesn't move at a consistent pace. There will be, price speeds up as participation levels increase and decrease. And this is the tick speedometer indicator under here. And you can see as it oscillates in the different colors. Where we have green, we know the ticks are, there's more ticks, there's more participation, there is greater activity. So I just wanted to use that as an introduction. I'm going to stop there. I'm going to pass over to David, and we'll carry on a little bit more on that kind of theme the next time that we revisit this session.
Hello everyone, hope you can hear me okay.
Oh, David,
yep.
Very interesting fact about the NQ.
Oh, very interesting fact about the NQ.
Percentage-wise breadth, there are more companies.
I'll have to tell you that later, don't worry. Hold on a minute. Apparently the number of companies above the 200 daily moving average is now what? Sorry?
The largest ever since.
Largest ever. The NQ is absolutely ripping it up at the moment. And that's the reason I've got it on the Renko here. As Anna said, the Renko is just, it's just a fantastic charting. It's a non-time-based charting way of really smoothing out the trends in such a way that you just get these very even trends developing. We've got the trend monitor on here, we've got the trend dots you can see. And this is on the Renko Optimizer on NinjaTrader. I've actually got 3 platforms running. I've got TradeStation, I'll pull that over in a minute, and I've got TradingView as well. But this is the NQ, which is absolutely tearing it up. However, having said that, it's not being followed. There are worrying signals. There's a ton of money to be made in here, I can tell you. But there are some worrying signs which are quite interesting, which I'll just highlight at the moment in a moment or two. But this is what's happening on the NQ. You've basically got 15 second, 30 second, and 1 minute. So on the 15 second, we're running at 24. Divide that by 4 because it's 4 ticks a point. So that's a 6 basically. So this is loads of money in each of these bricks. I'm just going to reset this one to recalibrate it. This is on 30 second. So we'll just reset that one. That'll settle. It'll be slightly more. It's 29 basically. There we are. Just load that up. And then we go up to our slowest, which is on a minute, which is that one. Just click on that. That'll refresh, settle down, and that delivers 33. So those are basically the optimal brick sizes for trading the NQ right now. And obviously that'll change throughout the session. They'll speed up and slow down. You have to refresh it from time to time. But at the moment, that's what we're doing. The trend dots work very close to price action, pushing up into the spread, underneath again, pushing up, and the trend monitor you can see is just totally blue across the piece, which is what you expect. And down the bottom here, obviously you've got the time-based charts, equivalent 15, 30 in a minute, and you've got your VPA analysis, which you can do straight off the bat from those particular time frames. So it's just a great way to trade. What I want to show you is very quickly, let's just go to the multiple indices, which is here. Gold is also ripping up, and that's a worry. This is basically the three of them. This is the YM on the left, the NQ, and the ES on the right-hand side. You can see what they're doing on the day. This is the YM trading in a pretty narrow range. This is the ES traveling in a relatively narrow range, trading in a relatively narrow range at the moment. Just click that off. Sorry, I've got a ton of alerts coming in. This is the NQ. We had a huge day yesterday, and we're looking set for another huge day today. Obviously, a lot going on in the US at the moment, so there's a lot of volatility. But you can see what's going on in terms of the YM. You know, it's not following this massive move up on the NQ, which we've had. We had the spike down. We always get this surge in volume at the open, big surge at the open, and then the market starts to settle. You'll start to see the volume fall away a little bit, and then the market settles down and gets into its rhythm and what have you. So that's what's going on there. Now, while I'm on NinjaTrader, let me just hop over onto show you what's going on in gold, because that was moving very nicely too. And of course, what happens in gold happens in silver as well. There we go. That is the move in gold. This is 1:15 our time, so that's where we had the volatility trigger there. Then we've seen this tremendous move. The trend monitors keeping us in here. And then right the way out to the daily, if I pop the daily one open full size, you can see that we're still trading. We had this big sell-off a couple of weeks ago on the volatility trigger. And what does that tell you? Well, it tells you there's either going to be reversal or there's going to be congestion. At the moment, we've got congestion in that region. Yesterday's price action was interesting. It plunged. Then we had a lot of volume coming in, a lot of buying under that candle. And, you know, it's what you expect to see. Either we're going to get further congestion or we're going to get a move to the upside. But that is a ton and a half of buying coming in under that particular candle of yesterday's price action. And given it closed up, you know, we're looking for a further repeat of that. Now, the issue we've got at the moment, just pop that out of the way. The worrying thing at the moment is basically this. I'll just pull this over. This is on Trading View. Just drop that out of the way. That's the time of sales. There we go. Because what is happening at the moment is we've got the NQ is rampaging higher. In other words, risk on. But at the same time, we've got the yen here, which is rising. We also have, this is the dollar. This is the dollar index on 15. So we've got the dollar rising as well. Plus, as I've just shown you, we've got gold rising. So you've got a bunch of assets that you would expect to be moving in the opposite direction, and they're actually moving with this rampaging move from the NQ. That in itself is a worrying sign, because you wouldn't normally expect to see the dollar rising with gold. In itself, that inverse relationship is out of kilter anyway. So you've got normally the two work inversely. So you have rising commodities, falling dollar, and vice versa. But actually what you've got is you've got those asset classes moving together. Aussie yen's moving sideways, New Zealand yen's moving sideways, CAD yen's moving sideways, but the British pound is selling off quite strongly. You can see it up here. It's not unusual to see that from time to time, where you get one currency pair in a complex behaving in a different way to the others. We've seen it many, many times over the last few years, particularly with regard to the pound. Because of Brexit, because of all the negotiations that have been going on and everything else. But that's what we're seeing in terms of pounds. A very strong move on the pound, and the trend monitor is supporting that. As you can see that there, it's on 15-minute. This is on an hour, so this is pretty slow. But I just wanted to highlight what's going on in terms of risk. We've got the Swiss franc, which is selling off, which is fine, but it's not following that, and the dollar is also rising with that. So you can see it here. And that's why they've been quite strong moves in terms of the currency majors. So let's just move that out the way. This is on TradeStation, which has been a long time coming, but we're here. This is on 9.5. You can see it up at the, I haven't got it up the top there, but I can tell you it is 9.5. This is just the currency futures I've got here. I showed this morning. A lot of alerts going off because you've got multiple ways of running alerts, and unfortunately they're on the default at the moment, so I've got to close them off later on today or the rest of the week. But basically down here I've got the 6A, 6B, which you're looking at with Anna, which I've got here. You've got the 6C, which is the dollar CAD, but it's actually the inverse of that, so it's CAD dollar, because everything in the futures world is quoted against the dollar. So it's the inverse, which is why you get these strange numbers. You've got the 6E, which is euro dollar. You've got 6J, which is yen dollar, not dollar yen, and you've got the New Zealand dollar down at the bottom there. And with TradeStation, it really just demonstrates the power of the radar screen application, which is these windows here. And what I've got is I've basically set up different time frames. So you've got 1 minute complex, 2, 3, 5, 10, and 15. And the beauty of it is that in one workspace where I've literally crammed everything together, on the radar screen, you've got the trend monitor. So the trend monitor gives you an instant heads up on what is going on the various time frames. So you can see what's going on the 1 minute and the 2 minute, and etc., right the way down the page. And then I've also got the quantum trends set up. So these little trend dots you can see here, as they change color, they will change color over here. And again, it just gives you an instant view of what is going on across the time frames, where to go and dig out opportunities, and it's all contained within the power of the radar screen. You'll see more of it on TradeStation version 10 with Anna later on the stock side. I've also got on this workspace, I've got another one exactly the same. In fact, if I click on it, there we go. On that one, the reason I click that over is because I've got the volatility trigger on there, and you can see them coming in all the time. So you don't have to go around hunting around. You can see how far back, some of these are. There was 150 bars, 17 bars. They'll come in real time. That was 6 bars ago. Tells you if you're not in a trade, maybe it's an opportunity to go and look at that for a potential reversal. If you are in a trade, maybe it's time to get out. It tells you all sorts of things, but it tells you instantly on the radar screen what is going on. And a lot of the indicators we have now for TradeStation are available within radar screen. I haven't put them all on here. You can put the CSI in. It'll tell you overbought and oversold signals, all sorts of things like that. As I say, they're not all available, but we put as many in as we thought were relevant to use and had a valid reason for being in the radar screen application. So it just tells you across the piece without necessarily having to put all these charts up. I put them up here because I wanted to show you them in real time. But you can have this running on a single workspace maybe, and you can just dig out the opportunities. And this is all linked as well. So if I want to change over, I just click on one of these here. Just click on that one. I don't know why it's not working at the moment. Should be. Sorry. There we go. Sorry, it's a bit delayed. There we go. It just changes over all the time. Get rid of that. Don't want that. Don't want that either. Oops. Cancel. Leave that there. Let's just go back onto the VPOC. There we are. So this is exactly the same with the volume point of control. And again, on the radar screen, what the radar screen will tell you is where the volume point of control itself is. So you can see up and down the time frames where that is on the charts, how far above, how far below, everything else you could possibly want to know. It's just a very, very powerful application of trading of the TradeStation package. And so that's on, just find my time and sales again. Where is it gone? Where's it gone? There we go. That is on both 9.5, that's being driven by interactive brokers, and the one you'll see shortly with Anna is being driven through the TradeStation security on version 10 and above. If you have an interactive brokers account, you can just link it straight through. It's terrific. Just seeing a bit of a sell-off in gold. Let's go and see what's happening in terms of other markets. One in particular, we've got the softs here, soft commodities. These have been a rampaging higher, but again, once you start to look at daily, this is on, this is corn. This is the corn contract for March. And it just really demonstrates the power of volume price analysis. It doesn't really matter what you're trading. It works daily, it works intraday. It really doesn't matter. Here you can see it. We had this day here the other day, big wick to the upper body, 1.5 tons of volume coming in here. What is that telling you? It's telling you there's weakness on the horizon. It's not necessarily telling you that this is going to roll over completely and deliver a trade right the way back down to the volume point of control, for example. But what it does tell you is it tells you there is weakness ahead. So do not be surprised to see this sort of price action developing, in other words, downside price action. Whether this is going to be a full-blown reversal from primary to primary bullish to primary bearish will depend on what happens over these candles and the price action, and that is something we explain in great detail in the Forex program, because understanding that is another application of volume price analysis. It is the application whereby, are you seeing a secondary pullback as defined by volume, or are you actually seeing a major reversal developing, which is confirmed with volume in the reversal itself? And really, it's the hub of everything, if you like, because if you think about it, if you're in a trend and you've got a good position, the one thing you want to know when the market starts to pull back against you and take some of that profit out of your account or off that particular position is this actually reversing against me 100%? In other words, am I going from a primary bullish to primary bearish or vice versa? Or am I simply witnessing a pause point in this trend and therefore I should hold the position? It's part of the reason we developed the trend monitor. It's part of the reason we developed the trend dots. Haven't got them on this chart. Because if you can maximize the profit potential from the trend, that is what takes you to the next level in terms of trading, because the biggest drawback and the biggest hindrance to your account moving forward is where you are taking small losses. We all take small losses, every day we're taking small losses, but it's the bigger winners that we have to bank. And banking those bigger winners is hard, because once you get some profit in the position, you want to bank it and take it off the table. And it's the worst thing to do, because generally speaking, that trend will develop further. And the market is geared and designed around shaking you out of a position all the time. Let's just go back onto the indices, just see what's going on there. Down the bottom here. There we go. Okay, it's paused a little bit. It's coming off a little bit. We've got volatility now. We've got the VPOC up here. No great surprise. We've got volatility on that particular candle, so we're expecting some congestion develop. What you also see on that particular time frame, bear in mind this is from the open, and as I said, you will inevitably see this sort of volume described in this way anyhow, because you're going to get a big surge at the open and then it's going to fall away. But in addition to that, you are seeing this price action narrow. So it's no surprise to see that rampaging price action come off. In a way, it's what I was saying earlier on. When you've got all these asset classes moving in a similar direction, it is a warning flag. Something's not right. You normally expect to see, the yen is risk on, risk off. Dollar, same. It's a safe haven asset. Swiss franc, similar. Gold, very safe. So you're always looking at these markets for confirmation. Are they aligned? Are they moving in the same direction? Are they not moving? Are they moving in the right direction? In other words, are they rising when others falling, and vice versa? You're always looking at these opportunities, and you're always looking for anomalies in the same way that you do in VPA, to just give you a heads up as to, well, okay, I'll take this trade, but I'm not going to be in here very long. And certainly that's the view I would have had the NQ. Moving at that sort of speed, it's a warning signal in its own right. Just going to switch off for a moment, because we're going to have wrap up in a moment, because we've got to run on to the next one at 3:15. So let me just go back, and I'll show you on the Rencos what's going on, because it would have reverted on there as well. I think it's on that one we had it. Yeah, we go. Okay, so that's come off there. And you can see it down here. We've got the trend monitor now is reverting to red. It's rolled over. It's moving into red, moving into red, moving into slower phases here, where we're seeing a slowdown in the price action. You can see the dollar, it's rampaging higher. This is on 3 minute. Okay, it's pretty quick. Nevertheless, you've got the dollar going very, very rapidly higher. You've got the yen climbing as well. We'll probably see the Swiss franc climb if they're going to continue. And that's what it's all about. It's all about understanding risk. Because when all's said and done, you boil this market down to one very simple principle. It's either money chasing higher risk for higher reward, or lower risk for lower reward. That's it, nothing else. It's moving between the four asset classes in that way, and it doesn't matter what you're trading, it all ties up to the same thing. Very quickly going to wrap up. Where are we? There we go. This is where you'll find all the indicators over at quantumtrading.com. MT45, NinjaTrader 7.8. We are working on TradingView right now. We are working on pulling over all the other indicators, matrix, array, CSI, support and resistance, and the VPOC. They will all be available there pretty soon. So if you have the full package, you will get those for free. So it's not a bad time to invest on that one, because I rest assured as soon as they're available, we will be putting the price up. So if you have that, good news for you, you'll get those free of charge. And the TradeStation, we've launched that now. We've got, as I say, 9.5 and 10. You'll see 10 in about 15 minutes time. That's the education program. It's up and running. It's extremely popular. And I have to say we are very proud of that, and very humbled by the traders who are doing so well in there. It's brilliant. We've got so many students on it now, and we've bolted on the funded program. You can join that. It's optional. You don't have to join it, but we added it on so that you, as a student of the program, because this is not available to anyone else, you only access this through the student program, is to give you the opportunity to leverage your knowledge with these funded accounts. It's our money. It's not your money. No risk to you. There are risk and money management rules. Of course, that's what you would expect, but you start with a 5, 10 or 15,000 account, and you go in multiples of 4 up to the first level, which is from 15 up to 60,000, and we then double it. So if you're on 60,000, we give you 120,000 to trade, and then up to 240 and 480 and so on up to 2 million. As I say, there's no risk. It's our money, not yours. And you can leverage your knowledge and you profit. You profit accordingly. We pay you back lumps of profit as you make the money. So it's a win-win for everyone. Finally, just Anna's site, annacooling.com. That's where you'll find all the books up on Amazon in paperback and Kindle, and all the links to the various sites here, and the indicators as well, and the complete Forex trading program as well, down at the bottom there. Right, we're going to run along. We've got another webinar at 3:15. Just going to grab a cup of tea. Thanks for coming along to this one, and we will see you shortly in the next one. If not, enjoy the rest of the trading session. Bye for now.